Hello, my name is Troy Adkins, and I am the founder and owner of Adkins Capital Management. I want to talk to you today about the key policy event that has transpired in the residential housing market for the quarter, to provide an assessment of the mortgage lending environment, and to provide an overview of the home price level for a select group of cities throughout the U.S. The purpose of this quarterly presentation is to bridge the gap in the residential housing market, where deficiencies in education, public policy, regulation, product structure, and personnel have created an environment where prospective homebuyers need objective information and useful analytical tools in order to help them make a prudent home purchase decision. With this in mind, let me now turn your attention to the primary events that have transpired in the residential housing environment. For the third quarter of 2015, a comprehensive study published by the Wharton School at the University of Pennsylvania on June 5, 2015, titled A New Look at the U.S. Foreclosure Crisis, Panel Data Evidence of Prime and Subprime Borrowers, was the primary housing topic for the quarter. The study encompassed over 19 million owner-occupied housing units in 96 metropolitan statistical areas from 1997 to 2012. Based on the analysis, the study found a host of key findings. First, the foreclosure debacle started as a subprime borrower event, but quickly morphed into a much bigger and broader event dominated by prime mortgage borrowers. Second, twice as many prime borrowers lost their homes as did subprime borrowers. Third, housing traits, race, initial income, and speculators did not play a meaningful role in causing the foreclosure debacle. Fourth, the homeowner's current loan-to-value ratio is a powerful predictor of foreclosure, regardless of loan type. And fifth, negative equity was found to be the primary factor that led to foreclosures. Overall, the housing bust and its consequences are among the defining economic events of the past quarter century. Moving away from the housing events to the housing trends for the third quarter of this year, it is important to note that the national average mortgage loan interest rate for a 30-year fully amortized fixed-rate mortgage loan began the quarter at 4.19% and ended the quarter at 4.01%. Since June of 2011, the national average mortgage loan interest rate for a 30-year fixed-rate mortgage loan has been less than 4.61%. Most financial pundits expected the national average mortgage loan interest rate for a 30-year fixed-rate mortgage loan to increase slightly over the quarter. The consensus belief was that the Federal Reserve Chairman would increase the key federal funds rate following its meeting in September. However, given the correction in the U.S. economy, as measured by the U.S. equity indices, many people now believe that an interest rate hike will not take place this year. With that said, when the federal funds rate is increased, mortgage loan interest rates will likely increase. Therefore, prospective homebuyers should closely follow the level of mortgage loan interest rates in their community, as the rising cost of interest expense will have a negative impact on the price level of residential housing in their community. Now that I have provided an overview of the events and trends that have taken place in the residential housing environment for the quarter, let me turn your attention to the methodology that is used to provide an assessment of the price level of homes in a community. The Adkins Residential Home Valuation Analyzer analyzes the relationship between the median home price level for a city and the median household income level for a city. With this information, the software application takes into account the most recent month-ending national average mortgage loan interest rate for a 30-year fully amortized fixed-rate mortgage loan, and the assumption that no more than 28% of pre-tax household income should be spent by homeowners in order to repay the principal and interest costs for their mortgage loan. By utilizing this information, the Adkins Residential Home Valuation Analyzer can accurately assess the price level of homes in a city. From the first analytical perspective, the Adkins Residential Home Valuation Analyzer determines the level of underpricing or overpricing of homes in a city by calculating the mortgage loan interest rate that justifies the price level of homes in a city. With this information, the justified mortgage loan interest rate is compared against the national average mortgage loan interest rate in order to accurately assess the level of underpricing or overpricing of homes in a city. From the second analytical perspective, the Adkins Residential Home Valuation Analyzer calculates the percentage of household income that would have to be spent by the people that live in a city in order to justify the price level of homes in a city. With this information, the justified percentage of household income amount is compared against the traditionally accepted household income amount of 28% in order to accurately assess the level of underpricing or overpricing of homes in a city. Now that I have provided an overview of how the Adkins Residential Home Valuation Analyzer is utilized, let me provide an overview of the home price level for a select group of cities across the U.S. For the third quarter of this year, 26 cities that make up the Adkins 60 City Home Price Index were classified as overpriced for the quarter. The top 5 overpriced cities were Bridgeport, Honolulu, New York City, San Francisco, and Los Angeles. In terms of a relative price level analysis, it is important to note that it is not possible to justify the home price level for the top 5 overpriced cities by reducing the national average mortgage loan interest rate from 4.01% to 0%. Therefore, in order to classify the homes in the top 5 overpriced cities as underpriced, it would have to be deemed prudent by prospective homebuyers to spend more than the respective justified percentage of household income amounts, or the respective median household income level would need to increase to the appropriate level that is within the range of $86,201 and $152,309. As a last observation, based on the median household income level, the quarter-ending national average mortgage loan interest rate, and the assumption that no more than 28% of pre-tax household income should be spent in order to repay the principal and interest costs for a mortgage loan, the justified home price level for the top 5 overpriced cities would need to fall to the appropriate level within the range of $172,912 and $341,602 before homes would be deemed appropriately priced in the cities. Prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to accurately assess the level of overpricing or underpricing of homes in their community. On the other side of the spectrum, 34 cities that make up the Adkins 60 City Home Price Index were classified as underpriced for the third quarter of this year. Detroit, Wichita, Sioux Falls, Little Rock, and Wilmington were identified as the 5 most underpriced cities in the index. While Omaha has the same justified percentage of household income amount as Wilmington, Wilmington was ranked as the 5th most underpriced city in the index due to its higher justified mortgage loan interest rate amount. In terms of a relative price level analysis, the national average mortgage loan interest rate would have to increase from 4.01% to more than the respective range of 7.25% and 19.7% before homes would be classified as overpriced in the cities. As a last observation, the justified percentage of household income amounts would have to be deemed as an inappropriate level for homeowners to spend in order to repay the principal and interest costs for their mortgage loan before homes would be classified as overpriced in the cities. Given the recent events that have transpired in the residential housing market, and taking into account that buying a home will likely be the largest single financial transaction that prospective homebuyers will ever make, and the bulk of their net worth will likely be tied up in their home, prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to help them make a prudent home purchase decision. For more information about the Adkins 60 City Home Price Index, and to access the Adkins Residential Home Valuation Analyzer, please visit the Adkins Capital Management website at residentialrealestateanalysis.com. Thank you for taking the time to listen to this presentation.